Hello everyone, welcome back to my channel. Today I am super excited to share a detailed look at a Jeena Sikho Lifecare Limited's Q1 FY26 results. As someone who is passionate about finance, I hold an MBA in finance and certified FRM. I want to break this down in a way that's clear, honest, and relevant for all of us following the Indian healthcare and equity story. Let's get right into the numbers because there's a lot to talk about. Jeena Sikho Lifecare's revenue skyrocketed 74% year on year, landing at 174 crore this quarter. That's massive growth from 100 crore last year. If you have been tracking them, you will know this is a big step up. EBITDA, that's up 220% to 78.8 crore. The margin is 45%, almost doubling their position from last year. And it really jumped out at me when I was reviewing the reports. Profit after tax hit 51 crore, a 218% annual rise. For shareholders, EPS stands at 4.13, way up from 1.3, showing that their expansion is translating directly to value for all investors. Let's discuss operational performance. If you are into how companies grow operationally, this part's for you. Jeena Sikho added 391 new beds, with over 2,179 beds now running. They are in more than 100 cities and 23 states, which is wild. Imagine the logistics behind ramping up that quickly. And on patients' volumes, IPD is up 46%, OPD patients are up 68%, and their telehealth initiatives are gaining strong momentum, with video consultations rising 64%. Daycare services also stood out at an incredible 164% rise compared to last year. Now, looking closer at the segments, about 54% of revenues came from services like Panchakarma and advanced therapies. These are the kinds of wellness services that make Ayurveda super relevant right now. Their OTC portfolio is expanding too, with launches like the Pet Yakrit Pliha Shuddha kit making noise in the market. I personally think their pipeline could be a game changer for chronic and lifestyle health. The team is also smartly reducing their reliance on government contracts down to just 8% of the revenue. Receivables from the public sector have dropped, which is the excellent risk management. Now let's look at the strategy and technology. As an analyst, I get excited when I see companies investing in tech. Jeena Sikho's Salesforce rollout, ERP enhancement, and AI pilots for diagnostics are forward-thinking moves. With their recent migration to mainboard of NSE, BSE, they are signaling bigger plans for more visibility, broader investor base, and stronger governance. I love their approach of partnering with Ayurvedic colleges to minimize capex per bed, making growth both rapid and sustainable. Now let's look at the management outlook. The guidance for this year is bold: 700 crore from hospitals and clinics, and about 500 crores in OTC sales in year or two. Internationally, they are already in Dubai and Nepal, with more clinic franchises likely, and with 15 new OTC products on the way, all backed by clinical trials. There are plenty of upside here. Now, let's look at the valuation and the risks. Jeena Sikho Lifecare Limited's current valuations are distinctly expensive by sector and historical standards. The stock trades at PE ratio of over 100, which is more than double the average for pharma and healthcare peers. This premium valuation reflects Jeena Sikho's rapid growth and future growth expectation, but it does carry risk. Much of that anticipated value is already priced in and leaves little margin for error. Even with robust earnings and operational momentum, the price paid for company's share is high relative to its current earnings and book value, suggesting that the stock is not cheap at the current levels. To conclude, at today's metrics, Jeena Sikho Lifecare is trading at an expensive valuation. Investors need to be aware that while growth prospects appear strong, any slip in execution or industry environment could prompt a sharp correction given these stretched valuations. Well, that wraps up my deep dive on Jeena Sikho Lifecare's latest results. Let me know what you think. Drop your question and comments. If you want me to cover other healthcare or consumer stocks, just say the word. Don't forget to subscribe for more finance deep dives and real world stories. Thanks for spending time with me today. Your interest and feedback means a lot.